What does $580 million in crypto-related income mean for markets, policy, and your portfolio? And how should investors read a 927-page financial disclosure without getting lost? A new filing details Donald Trump's assets and reports more than $580 million tied to digital assets. Markets are parsing the scale, the mix with stocks, and what it could signal for regulation, liquidity, and risk appetite. The sheer length of the document points to extensive positions and legal entities, which investors often analyze for concentration and cash flow quality. More importantly, the crypto figure adds specificity that earlier public references lacked, giving markets a clearer anchor for debate. Here's why this matters. A highly publicized income number can reshape how investors frame the policy environment for crypto. It can influence expectations around regulation, from market structure and custody to disclosures and tax treatment. It also spotlights cross-asset positioning at a time when inflation, rate paths, and earnings revisions are steering capital across stocks, bonds, and alternatives. For equities, the headline may reinforce the idea that crypto is a durable part of the financial system that can ripple into valuations for trading platforms, custody providers, miners, and blockchain infrastructure. Volatility could rise in sectors with balance sheets or revenue streams exposed to token prices, transaction volumes, and fee pools as investors recalibrate growth and risk premia. For credit, cash flow variability linked to digital assets can change how lenders view coverage ratios and borrowing costs. Counterparty and liquidity risks may get closer scrutiny, particularly for firms reliant on token-linked revenues or collateral. Structured products and ETFs with crypto exposure could see shifting flows as allocators reassess diversification benefits versus drawdown risk. The expanded disclosure also invites deeper mapping of holdings across public markets and private ventures. Granularity helps analysts gauge concentration, liquidity, and earnings quality, which can influence sentiment and fund flows. So what's the practical takeaway? Treat the $580 million figure as a signal that digital assets remain material to capital markets and policy debates. If you own or track crypto-linked stocks, stress test assumptions for volume-sensitive revenues and margins. In credit, revisit coverage under lower price scenarios and check liquidity backstops. For diversified portfolios, define position sizes, rebalance rules, and catalysts tied to regulatory timelines. And keep an eye on ETFs and sector funds where narrative shifts often move flows first. Read the full article at finlitica.com. Quick reminder, this is general information, not financial advice. Your money, your decisions, so always do your own research.